Morning, ladies and gentlemen. This is Greg McCloskey from FXDD. This is Monday, April 5th, New York Morning Forex Report. Today we do is a fairly quiet day. Most of Europe is gone, so no economic data coming out of that region. In the U.S., we do have U.S. ISM non-manufacturing coming out at 10 a.m. Expectations are 54 versus 53. Pending home sales are also due at 10 a.m. Expectations are 0 versus minus 7.6. They have been quite weak as of late. Also of note today is that the Fed is apparently meeting to discuss the Fed discount rate. If you look at this chart, in the past, the discount rate to Fed funds spread has been 100 basis points. That is, the discount rate has been 100 basis points above the Fed funds target rate. During the 2007-2008 financial crisis, the Fed lowered that spread to 25 basis points. About a month or so ago, the Fed raised that back up to 50 basis points, and the expectations that over time the market is going to move eventually back toward this 100 basis point spread. Whether that happens today or not is unsure, but the talk is that perhaps they may do either 25 basis points or 50 basis points to move back toward normalcy. If they do that, then and the last time they did, they raised the rate by this 25 basis points. The market was surprised. The dollar did get better bid, but the reaction is still unknown for that. And in fact, we are seeing the dollar get a little bit weaker here today. The euro's moving higher as we speak here in New York trading. We just are testing the 100-hour moving average at 134.97. We also have resistance against this trend line at the 135.04 level. The high just reached 135.03, so we're going to have to break through that 135.04 level, get back on the plus side of this trend line that has been developing since March 26th in the euro versus US dollar to get the market moving back to the upside. Here we do have resistance up above at the 35-ish type level. If you go back to the daily chart, you can see there's a number of different, there's a low here, low, all against this 35 level, and then we started to use it as resistance at this area right here, and today we had a high of 38. So really around the 35-ish type area, I would expect to see continued resistance if the market is able to get above this 04 level. If we're able to get above the 04 level, we should see further upside momentum for the euro versus US dollar. Sterling has been benefited here today. It gapped higher over the weekend on the Conservative Party's widening of their lead against the ruling or the leading Labour Party, or the current in-session Labour Party. So this has eased some of the concern that the UK UK elections would go with no clear majority party favorite, and as a result, with that worry a little bit less after the weekend polls, the sterling has gotten a big boost. And here in the New York over the last 3 hours, the market has seen the market move higher, moving toward the highs for the day. The high during the first hour came in at 152.92. The current price trading at 152.89. Just breached a high of, well, we're trading at the highs at 89 currently at the moment. Now on the upside, we do have this underside resistance level that comes off the old trend line at 153.02. So we've been watching that level, looking for resistance against that 02 level on the top side. Off the 5-minute chart, you can see how the 100 and 200 bar moving average converged, and the market took that as a reason to go higher. Then it quickly retraced in New York session back down toward the support, and has since moved higher off of that level. But choppy action here after the gap higher. We do have this gap. This gap goes from 152.05 to around the 152.20 level, and that eventually should get filled at some point or another. Maybe it won't be today. Maybe it will be a week. Maybe it'll be 2 weeks down the road. We don't know, but we'll be watching that gap. If the market starts to fail at the top, perhaps that might be something that we do rotate back down. It is a semi-holiday type week or a day here in the U.S. with European sessions closed. Taking a look at the dollar versus yen, we have a nice a trend line here that we were forming, a nice channel trend line, to be honest with you. We did break below that channel trend line on Friday, but that was very quick. We came down to the support level. That was off of the initial reaction from the employment report, which came out less than expected. But then if you look deeper into the number, the market was a little bit stronger. So now, right now, we're testing the support level at 94.36. This is where the trend line comes comes in. We also have this floor here, this low here from Friday at 34 as well. That's all going to come into play here for the dollar versus yen. Off the daily chart, we did see the market move sharply higher over the ever since breaking through the 200-day moving average a few weeks ago at the 91.58 level. The market again moved to a high here today at 94. What is it? 94.78. 95.08 is 61.8% retracement. That's the target for the currency pair. But look for this support at the 35 level, which we're currently seeing right now for the dollar yen. If it does break, we could see the market move down toward this 93.76 level, which is 38.2% retracement. That's moved to the upside. Taking a look at the dollar Swiss, we were looking to test the top side 200-hour moving average, but with the dollar getting sold here, the market has reversed its course and now heading back toward the 100-hour moving average at 105.87. So that we'll look for support at 105.87. Currently trading at 105.93. If it breaks that 87, we should see further downside with a move toward the 105.55 level, certainly as a level of a target. Taking a look at the Euro Swiss, it's just still going sideways after the sharp move higher. The market just is moving incongruent with the euro. So for the Swiss and the Euro Swiss is as a result moving just sideways in that currency pair. The other currency pair of note here today, I mentioned our oil prices are up over $1, approaching, or it was now it's currently up 84 cents, approaching $86 a barrel, and this has pressured the dollar versus Canada to new low since July 2008. The trend line support off of these lows here comes in at around the par 29 area. We'll be looking for support against that level on the top side. We got to look for resistance against the 60 to 65 level. Those were the lows going back. This is 60 low. This is 65 low from last Thursday, and we should see resistance against that level as the market moves back down toward the parity level in the dollar versus Canada. So that's my morning report. We'll talk to you later. Bye-bye now.